Welcome back to Financial Market Insights for Traders. I'm your host, Sophia. And if you've ever asked yourself, should I buy now? Or am I missing out? Right after reading about a meme coin that just exploded 300%, this episode is for you. What you're feeling, that urge to jump in before it's too late, is called FOMO, fear of missing out. And in trading, it's one of the most dangerous emotional triggers there is. It clouds judgment. It overrides strategy. It turns even the smartest traders into impulsive decision makers. And more often than not, it leaves regret in its wake. So today we're diving deep into how hype cycles hijack your psychology, how emotional investing decisions lead to costly mistakes, and how to stay grounded in the middle of the madness. If you're searching for trading psychology tips or wondering how to be a disciplined trader during volatile markets, you're in the right place. Let's start with the psychology of it all. FOMO isn't some random feeling, it's deeply human. It comes from social proof, loss aversion, and a dopamine feedback loop. When everyone around us is buying something, we assume they know something we don't. That's social proof. When we feel like we've missed an opportunity, our brain treats that like an actual loss, and losses hurt more than wins feel good. That's loss aversion. And when we scroll social media and see someone bragging about turning $500 into $10,000, our brains light up with dopamine. And we want that high. But here's the cost of giving in to that emotional rush. FOMO-driven decisions usually lead to one of four outcomes. First, buying the top and selling the bottom. That meme coin that just went viral? You're probably entering right before momentum fades. As soon as the early buyers take profits, the price dumps, and now you're the exit liquidity. Second, risking too much. Emotional trading clouds judgment, and that often leads to oversizing. You think, if I miss the first 200%, I'll just go heavier now and make it up. But oversized positions mean you have no room to manage risk. One wrong move and you're out. Third, breaking your strategy. FOMO often tempts traders to throw away their usual setups and rules. Instead of trading what you've backtested and trust, you trade what's trending. And the result? Inconsistency, self-doubt, and losses. Fourth, chronic burnout. If you're constantly reacting to the market instead of executing your plan, the emotional highs and lows will wear you down. You'll feel like trading is chaos, when really, the chaos came from within. So how do we fix that? Let me give you 10 trading psychology tips that help you manage FOMO and keep your discipline sharp, especially in hype-driven markets. Tip 1. Have a trading plan. That's your anchor. Every trade should be based on a clearly defined strategy, specific entry triggers, stop-loss levels, profit targets, and position sizing rules. When you trade without a plan, you're gambling. With a plan, you're executing. Tip 2. Use the Fear-Greed Index. This tool aggregates market data into a score that reflects overall sentiment. Extreme greed? That's your cue to be cautious. Extreme fear? That might be a good time to prepare to buy. It's not a trading signal, but it helps you step back and view the crowd from the outside. Tip 3. Avoid hype zones. When the market's going wild, platforms like Twitter, Reddit, and TikTok explode with excitement. But what you're seeing is often manufactured confidence or cherry-picked wins. Use those platforms for research, not entry signals. Tip 4. Journal every trade. Not just what you bought or sold, but what you were feeling, what your plan was, whether you followed it, and what you learned. Over time, patterns emerge. You'll start to recognize when emotion took the wheel and how to take back control. Tip 5. Let technical levels guide you, not headlines. Ask yourself, is this asset at resistance? Is the RSI screaming overbought? Is volume drying up? Let the chart talk, not the influencer. Tip 6. Practice with simulated trading. Before risking real money, test your strategy and discipline using a demo account. It's one thing to stay calm in theory, but simulation shows you how you react under pressure. Tip 7. Cap your trades. Set a maximum number of trades per day or week. Try something like, I only take 3 trades per week, or only 1 trade per asset at a time. Constraints force better decision making. Tip 8. Accept that you'll miss some big moves, and that's okay. Letting one trade pass doesn't mean you're failing. It means you're being selective. There's always another setup. Always. Tip 9. Follow mindset experts. Knowledge is power. Read Trading in the Zone by Mark Douglas. Listen to the Crystal Ball Markets podcast. Hear how other traders manage FOMO. You're not alone in this battle. Tip 10. Use a beginner-friendly platform. Many platforms push you toward overtrading. You want one that's built for focus and clarity. Crystalballmarkets.com is just that. Simple interface, educational resources, and built-in risk tools that help you trade your plan, not your emotions. Here's a bonus. Use this FOMO checklist before entering any trade. Ask yourself, am I following my plan? What's my actual risk and reward? Would I take this trade if no one else was talking about it? What does the chart really say? If any answer is shaky, don't trade. Journal it. Sleep on it. The market will still be here tomorrow. Let me wrap this up with one simple truth. FOMO is a test, not of how smart you are, but of how patient and disciplined you can be. It's easy to get caught up in hype. It's harder to stay focused on your edge. But that's the difference between short-term chaos and long-term consistency. You don't need to ride every wave. You just need to know which ones to let pass and which ones to execute with precision. So if you're ready to trade with intention and clarity, check out crystalballmarkets.com. They've got the tools to help you stay focused, stay grounded, and build confidence over time. And if you want more mindset tips and emotional investing insights, make sure to subscribe to the Crystal Ball Markets podcast. We've got real talk, real stories, and real strategies to help you level up. Until next time, trade smart, stay disciplined, and don't let FOMO trade your money. This is Sophia with Financial Market Insights for Traders.